Good afternoon, everybody. Ladies and gentlemen, for 34 years we've been adamant that our clients purchase properties as investments in major metropolises. About 6 years ago we determined that by what we would say is a very strict definition, we determined that Brisbane had become a major metropolis. And why is that so? Now, just before we get into discussing that, I'd like to just very briefly talk to you, to those people that may not know about Land and Property Partners. Land and Property Partners is a corporation that comes under the umbrella of the John Hopkins Group, and over the last 34 years John Hopkins clients have purchased in excess of $4.5 billion worth of property investments, mainly in Melbourne and Sydney, but now for the last 6 years, as I said a moment ago, in Brisbane as well. We've managed more than 4,000 tenancies at the one time for our clients. We've managed more than 500 owners corporations for our clients. We've consulted, literally on behalf of our financial services partners, accountants, financial planners, financiers, in the past lawyers were part of that group, but we've consulted literally with thousands and thousands of individuals about their financial circumstances, and specifically in regard to them being successful property investors. So I don't say that to rant or to be self-serving. I say it to you, for those who don't know us well, to say that I'd like to hope that we have some experience, and the things that we talk about today, come from a lot of investigation, experienced intuition, and very careful thought and planning. Firstly, and we've only got half an hour today, so I'm not going to go into depth with these things. I want to make the point that we're talking about retail property investors, and as the government inquiries define retail property investors, they're all those individuals or family businesses that own property with tenants. We're talking about investment. We're not talking about speculating, and we're not talking about trading or making money as a career out of property. We are talking about investment, and as far as I'm concerned, that's absolutely a minimum of 10 years, 20 years, 30 years. What I would say to you, and to say to our mutual clients, and we've said to many clients in the past, is you buy the right property in the first place, you put it in your back pocket, and you never sell it. That's how to be a successful investor. And when I look at the properties in the 80s that our clients bought in Kirribilli and Double Bay and East Melbourne and Albert Park, and I see the ones that still own those properties, that's where the success is. They can't believe what's happened, but it mightn't be a 10-year period, because it could be the 15 or 20 or 30-year period. What investors want is returns. Too often people focus just on capital value. So in returns, it's very important to say what we want out of our investments, out of our property investments, from a return point of view and confidence of income. And I'd like to say to you that of all of the categories of properties that we recommend as long-term investments, I think it would be fair for me to say to you that as long as our landlords have been asking a reasonable rent, I have never ever feared our clients finding a tenant for those properties, subject to Christmas time or subject to, a minimal slowdown in the tenancy market. But fundamentally, I have never been concerned about our clients finding tenants. So it's confidence of rent. What they need as well is security and flexibility. And where they will find that is in that property that has continuing strong demand of both tenancy and sale for now and for the foreseeable future, as determined by an individual or organisation with an appropriate criteria base, making a judgment on a specific class of property. Now, in summary, Land and Property Partners, fundamentally, in summary, this is the category of property that we recommend. It is medium to high density residential property in the best inner urban areas of a major metropolis. Now, if I take that out to our statement that embraces literally all of the factors that we consider in regard to what we will and won't recommend in these major metropolises that I'm talking about. These are the four statements, and this has been developed over many years and addressed and readdressed and readdressed, and fundamentally you can see and you can read, choose the best inner urban areas of a major metropolis from a demand, popularity and opportunity point of view. Choose properties in those areas that most people wishing to either own or occupy property in those best inner urban areas can afford, so it's low price range. Choose those properties that are most appropriate as a long-term investment, namely from a physical maintenance and tenancy management point of view, and choose those properties that are most appropriate to the particular investor's circumstances. Very often that's financial, tax, or portfolio balance issues. So that's the statement that embraces everything. But in summary, as I said, it's quality, medium to high density residential property in the best inner urban areas of Melbourne, Sydney, and 6 years ago, because today we're here to talk about Brisbane, we determined that Brisbane was a major metropolis. So in explaining that to you, I just want to take you through our definition of what is or what isn't a major metropolis. And fundamentally it's where, if we can have a change, where if there is a change of one or two or three or four things, where the underlying supply-demand circumstances of a property market changes to such a degree that it either changes capital value and or income levels. And the example I often give is, talking in Canberra many years ago, I explained that one of the issues, and the important issues, if we look at Canberra and include Queanbeyan, is politics, because if we have a change in government in Canberra and the incoming government lets the public service increase by 5% or decrease by 5%, we will change the underlying supply-demand circumstances of that property market. We will change capital values and we will change income levels, and therefore Canberra is not a major metropolis. Now, the two fundamental indicators of what is or isn't a major metropolis, as far as our definition is concerned, is firstly population size, and secondly a strong and independent economy. Now, as I said 6 years ago, Brisbane, as far as we're concerned, is a major metropolis. Now, if we speak about population and the size of the population, Greater Brisbane, I understand, is about 2.24 million people. Brisbane proper, as they refer to it, is just touching over 2 million people. Now, interestingly, Perth has a population of about 1.8 million. So it would not be the population of Perth that would have us not determine that Perth is a major metropolis with regard to its property markets, like we believe Brisbane is, because of population. The issue with Perth is because of resources and the importance of resources and the impact of resources in the state of Western Australia. There is no question that the Perth property market is impacted at both up and down, depending on where the resources sector is at any particular time. So that's why not for Perth. It isn't the population. Now, just a word of warning about conversation that you will hear in regard to why Brisbane or why not Brisbane. People often talk about SEQ, and one of the things that you'll note in regard to reading a lot about Queensland and about Brisbane's property market is property markets is that the people will very often refer to SEQ, and that's South East Queensland. It's not Brisbane. We are not referring to SEQ. We are not referring to South East Queensland. We are being very much more specific and discussing Brisbane, not SEQ. Now, SEQ can go from the Sunshine Coast right down to the border of New South Wales and further inland to Condamine and areas like that. So it's a huge area that is included in that particular category, SEQ. So into the future, please, when you're reading about Queensland property, understand that we're specifically talking about the Brisbane property market. Now, in regard to its population, as far as Brisbane's concerned, everybody, over 2% increase in population through the 2012-2013 year. And by 2031, from 2006 to 2011, the population grew by 12.1%. So Brisbane's population, in terms of percentage terms, in terms of numbers, Melbourne's population is having generally each year has been for the last 5 years, having the greatest numbers of increases in terms of population, but by percentage terms, it is most definitely Brisbane. So not only is it a substantial population, over 2 million persons, but that population is growing, and the powers to be and the investigators would suggest and say that that could be expected into the future. So population-wise, Brisbane is fine. We then come to, is it a strong and independent economy? And in regard to that circumstance, if we think of the whole of Queensland, about 40% of the population of Queensland live in Brisbane. Now, when we think of Melbourne and Sydney, what you'll find is that the percentages of people that live in either Sydney in relation to New South Wales or Melbourne in relation to Victoria are much, much greater. And the fact is that we've got this huge population outside Brisbane in the state of Queensland. And then when we think of a strong and independent economies, you know, the Queensland economy is well-based because it has a substantial resources sector. It has obviously a substantial rural sector. Tourism is hugely important. You know, the fact that there are many people moving to Queensland, you know, to retire. So the growing in the population of the Great Hair group is also happening. And then Brisbane itself has a burgeoning financial services sector. And after today, I haven't got time to go through it all in detail, everybody, but after today, you know, I recommend you get onto the Queensland Government web and have a look for yourself about the sorts of things that they're discussing in regard to today in particular, but into the future with regard to the economy of both Brisbane, but also Queensland, and it's, you know, very, very positive. So fundamentally, when we look at Queensland, the relationship of Brisbane to Queensland, Brisbane itself, population size, absolutely means it's got a very sizable property market as far as we're concerned, and the economy of Brisbane is, of Queensland and Brisbane, is spread, maybe not to the same degree of Melbourne and Sydney, but most definitely spread to the degree that we can be confident that there's not one particular sector of the economy that's going to change to a degree that, you know, property in Bulimba or property in Fortitude Valley or property in Holland Park West, you know, all of a sudden it's going to change. It's just not going to change. That won't happen, but that can happen, as I was discussing before, in a market like Perth because of resources. So a strong and independent economy. The other thing in regard to Brisbane's economy, which I think is relevant to say, is that there is committed and happening now about $7 billion worth of infrastructure improvement, and through to 2031 there's about $134 billion committed in terms of infrastructure improvement. And I think that, with the population increases and the confidence with regard to the different sectors of the economy that we were talking about a minute ago, I think all goes well for relying on Brisbane as a property market to be strong enough and independent enough that that security can be had into the future. In regard to Brisbane itself, it's a very interesting property market, and there are specific issues that vary, you know, from the Sydney and Melbourne property markets. And if I, you know, talk to you about Sydney, for example, because of a 4.5 million person population, Sydney is quite forgiving in terms of its property markets. And, you know, I was writing a communication the other day to our client base, and I was talking about the Sydney property market, and I remember it was only a decade or maybe 12 years ago, and Piermont, you know, was a bit of a question mark. Not a total question mark in the sense that it was a speculation, because I think Piermont's position in Sydney, you know, near the water and near the city, was never really a question, even though it had a lot of redevelopment happening, you know, through the suburb. But there was a question about how solid it would be supported. And Surrey Hills, which is in Sydney, which is just obviously a suburb of Sydney that is strongly sought after by owners and by occupiers, again, not questioned, but, you know, wasn't solid, and it wasn't thought of like, say, Elizabeth Bay and Kirribilli, but where today, you know, it is really solid. And it sort of morphs through to, you know, Marrickville, or, you know, Waterloo's a good one, near Danks Street there, and between the city and the airports. And Waterloo, which was very much industrial, and there was a question around, you know, how it would go with regard to medium to high density redevelopment. And there's just no question that that strong underlying demand for that population of 4.5 million people that needs to be interurban, for reasons of transport and access to all the benefits that are to be had by being interurban, you know, that flows through to Waterloo happen. And in Victoria and Melbourne, that of course I know well, you know, I remember people looking at areas like Carlton or East Melbourne or Richmond, and, you know, will it happen to Fitzroy? Will it happen to Collingwood? Or how will Brunswick go? Well, it's just morphed through to Brunswick. Now, the point that I'm making with regard to Brisbane is that where we can be very confident in both Melbourne and Sydney, because of the size of the population and that real need to be interurban, that many, if not most, of the interurban areas of those two major metropolises, you know, they're going to morph from one suburb to another to another. In Brisbane, you know, very, very much and very important in terms of being careful is to know that that morphing in terms of demand, you know, doesn't happen. So if I, you know, give you an example, in regard to Brisbane, it's Fortitude Valley and Bowen Hills. Now, Fortitude Valley, for those of you that haven't been to Fortitude Valley, has got that sort of that social activity, that underlying demand, that popularity that, you know, if I think of, say, Melbourne, it's Carlton, you know, South Yarra 30 years ago, and it's Smith Street and Brunswick Street in the north of Melbourne today, or Lygon Street, you know, 20 and 30 years ago. It's got that excitement about it, and if you get a chance to go to Brisbane, you know, Fortitude Valley is just a lovely place to stay and spend some time in the restaurants and the surrounding area. Now, Bowen Hills is exactly next door, and it's our view and it's our advice that one buying a long-term investment in Bowen Hills needs to be very careful. And if you have a look at the advertisements, because there's quite a lot of development. Two things. There's a lot of development that can happen in Bowen Hills, and there's a lot of development that is happening in Bowen Hills. And nearly all developments that happen in Bowen Hills, from a marketing and a selling perspective, they nearly play off the back of Fortitude Valley. So it's so often written, you know, next door to Fortitude Valley, or very close to Chinatown. It's where it sort of isn't. It's not so much that Bowen Hills itself has really a strong underlying demand. Now, the showgrounds there that are being developed by Lend-Lease, I think, is a fantastic development, and that is on the verge. It's right on Fortitude Valley. So I would say, you know, maybe that's an exception, but going up near the Brisbane Hospital and further away from Fortitude Valley, Bowen Hills isn't there. So the point I'm making, probably a little bit too long-winded about it to you all, is in Brisbane it is so important to be very careful and specific about certain locations. Now, about 3 years ago, we recommended our clients purchase some lovely apartments in Milton, and Milton's on the north of the river, and it's the north of the river, and it's a lovely suburb, and it's a well-established suburb, and it's got great views, and it's about 2 stops, I think, from the city, and yet it's got its own identity, and we can go to other areas, you know, north of the river, Spring Hill, New Farm, which is on the river, which runs through to Tenerife, and then Newstead. All of those areas are terrific. But then there's been huge development by a number of substantial development corporations in Hamilton, which is near Ascot. Now, Hamilton and Ascot would be the Toorak and the Wallara and Double Bay suburbs of Brisbane. So they're the very expensive residential suburbs of Brisbane. And one would think, oh, that's terrific. But the fact is, as far as we're concerned, for medium to high density residential property, even though the developments at Hamilton that are happening, and they're well planned, even though they're happening, they just haven't got an owner-occupier demand. It really has been, to a substantial degree, investor-driven, and it's because, in our view, it's too far away from the city. Now, in both Melbourne and Sydney, I think that would be forgiven. I think it would be forgiven because it would morph through to a demand, as we've seen in certain areas in both Melbourne and Sydney. But in Brisbane, no, that's not the case. So north of the river, there are those areas. South of the river, in terms of Brisbane, the sorts of locations, you know, that we've looked at in the past and that we've recommended different projects could be Bulimba, and then when you go down to Highgate Hill, those sorts of locations near West Brisbane. Frankly, at the moment we're recommending a project in West Brisbane, which has just been terrific. It is literally, you know, right across from the river. It's not on the river because there's a road between it and the river, but it's right across from the river, and it's a terrific development. So there are just beautiful spots, very close to the city, and as I'm certain many of you would be well aware, we're adamant must be major metropolises. I have no doubt about Brisbane. We are equally as adamant that it must be inner urban. And sometimes people say, well, what's the circumference? Now, of course, you can't have a circumference for Sydney because the harbour's in the middle of it all. So it's not a circumference thing. It's not a circumference in Melbourne because it isn't just the fact that Port Phillip Bay's there. The fact is that in terms of the inner west, there are issues in regard to whether the inner west in Melbourne is all of the inner west is an area that we think has enough underlying demand of tenancy and so. So there are questions. It's not just inner urban. Now, the big factor, as I've already discussed in Brisbane, is of course the river. And I was saying to somebody the other day in our company, and we were discussing Brisbane, and I said, have you know Brisbane well? And they said, no. I said, well, one of the things when you first get to know the Brisbane property market is you get confused about where you are because of the river. The river is so important and so impactful in terms of, you know, just in particular access, you know, by the ferries. If you're in a terrific place, Bulimba, New Farm, Tenerife, and access by the ferries to the city, that's a fantastic and a very important positive fact. So south or north, just fine. It's a matter of being very specific and finding those areas where the underlying demand is solid today and not relying too much on that morphing that I've been talking about that can happen in both Melbourne and Sydney, because I don't think it will happen at the same in the same way in Brisbane. So north and south, another factor that's absolutely relevant for Brisbane, and you know, you could say, well, John, of course, but no, I mean at a deeper level than just of course, and that is public transport, because you can have suburbs in Brisbane. Half of the suburb is close to their bus network, which is sort of like a rail network because it has buses running along freeways, close to a railway station, where another half of the suburb may not be, and the impact definitely in terms of tenancy, but also in terms of underlying demand of owners and therefore capital values and capital growth can be substantial, where inner urban Melbourne, inner urban Sydney, fundamentally all of inner urban Melbourne and Sydney are serviced well by transport, where in Brisbane that's a huge impact. So the river makes a big difference. Public transport makes a huge difference in Brisbane, and we need to be aware of it with regard to specific properties, specific suburbs, and we need to be aware that in terms of purchasing property for that 5-year and that 10-year security and growth, that it has to be areas that are already really well sought after, and there's no question. So it is the sorts of areas that I've been, you know, talking about today to this point. So just to finish with everybody, in regard to Brisbane, I've talked about why Brisbane is different to Melbourne and Sydney. The fundamental issue around that, I think, is the size of the populations. So it's 4 and 4.5 million people for Melbourne and Sydney and 2 million people for Brisbane. The consequence of that is fine in terms of what's happening, but we've got to be very careful and very specific about the popular areas in Brisbane, as where in Melbourne and Sydney it can vary a bit. Talked about the impact of the river, talked about the impact of transport. Main conversation I think to have now is an issue to do with timing. And for all of you that advise clients in regard to financial matters, financial planning, finance and so on, I'm certain you've all heard the old adage, it's not the timing of the market, it's the time in the market. And it is so correct. And sometimes when I say that, and I say to people you must buy for 10 years and 20 years and 30 years, I think, gee whiz, that just sounds, you know, self-serving, because of course it's got to happen over that time. But after advising people on these things for 34 years, I've seen people, you know, fall off the wagon and sell early or not be strict in their adherence to that fundamental philosophy. It isn't the timing of the market, it is the time in the market. Now, whilst I say that, of course there are better and worse times to buy. And, you know, there's a fundamental that when a market is hot, it gets really hard to buy quality property. So in Sydney at the moment, property is selling so fast that to get access to quality property for our clients to purchase is not easy. And when we do get access to it, it's at prices, which, you know, is very hard to justify. So in terms of timing, it isn't relevant for the long term, but it is relevant in terms of getting access to quality, and it's relevant in terms of getting that upside from the day we purchase. Now, Sydney is very hard. 4 and 5 years ago, it was hard. It was very hard because the Melbourne property market was, so, for want of a better word, so hot. But finding that balance where we can be confident about an upswing because of movement and because of underlying demand and confidence in the economy, and not paying too much and getting access to quality, I think the timing for that is perfect for Brisbane. I don't have any doubt about those quality areas of Brisbane in terms of continuing strong demand of both tenancy and sale for now and for the foreseeable future, and we can get access to quality properties in the best inner urban areas of Brisbane. So timing is an issue to the extent that we can buy quality property there at the moment for our clients at a reasonable price, and that's why Brisbane today is a recommendation from us. Good afternoon, everybody. Hope it's been a reasonable investment of your time.